Good evening. It is time for today's Tax Talk. I'm your host. I'm attorney Stephen Leahy. It is Tuesday, February 14th. Happy Valentine's Day. The year of our Lord 2023. We knew it was coming. The big crackdown coming up, regulation from the United States, the SEC, and all others. And it's happening right now, and that's what we're going to talk about today on today's Tax Talk. Won't you join us? Yep. Right about 5 o'clock, I looked at the news and my story changed because I saw what was going on. They had a Senate hearing today and some other news, and that's what we're going to talk about. But before we do, it's Crypto Tuesday. And what do we always do on Crypto Tuesday? We investigate look at the price. So that's where we're going to begin, I hope. Let's see what's going to happen here. Here we go. We always go to our favorite site, coinflip.tech, and look at the market. Looks like, again, they're trading Bitcoin and Ethereum, trading very similarly, up a little bit today. Let's look at it for the last 7 days. This is really what's, remember now, never let a crisis go to waste. And with the FTX, which a lot has to do with the SEC, and we've all seen how the politicians were in line helping him. I don't know why that's not there, but we're going to skip it then. Helping that company literally fleece people, and then they use it as a reason why they can't have people fleecing people, even though I think, or many would say, that they were complacent to begin with. But now they're coming down hard. And so crypto markets on edge as U.S. regulatory crackdown on industry intensifies. There's another story here. This is the Wall Street Journal. Crypto investors brace for more crackdowns from regulators. We're going to start with this story. I don't think I'll have enough time to do the other story. Officials cut off access to products and services vital to digital currency business. There are those who think that we are going to cancel crypto and make it that crypto's illegal in America like they did in China. I don't think that's going to happen, but you never know. Crypto imploded in 2022 as investors lost faith in digital assets and the industry was plagued with crisis. But unlike other collapses, it has largely avoided rippling into other markets. Wall Street Journal explains how crypto became so interconnected. We know how. The walls are closing in around crypto. Regulators haven't taken action against many of the industry's biggest players, but are now cutting off access to products and services central to the digital currency business. Why haven't they gone after those? I think they're all pretty good at lobbying. On Monday, New York regulators shut down new issuance of the world's third largest stablecoin, BUSD, prompting investors to flee the coin and raising worries about the future of crypto exchange giant Binance, which gives the coin the B in its name. Binance's partner in issuing the coin, Paxos Trust Company, is facing a potential Securities and Exchange Commission lawsuit. A few days earlier, the SEC fined the parent of another big crypto exchange, Kraken, and forced it to stop offering a popular type of crypto yield product to U.S. investors. Banking regulators are quietly pushing banks to cut ties with crypto customers, limiting their ability to plug into the real-world financial system. The flurry of actions came after years of slow-moving investigations and debate in Washington over how to handle the fast-growing industry. It's been hurry up and wait, and now all of a sudden, here it comes. Let's read. Some observers detected a shift in official tone after the collapse of the FTX crypto exchange, which strengthened the hand of politicians and regulators, calling for tougher enforcement. Again, there are those who will say that it's the regulators and politicians who made that possible. Now, crypto executives are bracing for more regulatory lawsuits and investigations and investors have started to flee suspected targets. It currently feels, from an industry perspective, like there's a crypto carpet bombing going on right now. Over the 24-hour period from Sunday to Monday, there were $2.7 billion worth of outflow from Binance, according to blockchain data provider Nansen. On Monday morning, some 144 million worth of BUSD were redeemed for dollars, according to Nansen. Paxos said Monday it categorically disagrees with the SEC's assertion that BUSD must comply with federal securities laws. We've talked a lot about that on the show about should they be treated like securities or are they commodities? Binance's in-house token, BNB, tumbled 8% on Monday, according to CoinMarketCap.com. The coin is often seen as a gauge of investors' perception of Binance. Remember, that's how FTX did this, right? They moved a lot of their crypto and bought their own coin, and then they used crypto for investing, but it was backed by their own coin, which was false. And that was one part of the problem. And a lot of these exchanges are accused of doing the same thing. The scope of such actions suggests that the SEC and other regulators want to rein in pillars of the crypto market, such as stablecoins, digital coins that maintain a price of $1, at staking, a common way for investors to earn interest on their crypto. Worries of a crackdown appear to have taken the wind out of the sails of an early 2023 rally in the digital currencies market. Bitcoin was trading at about 21,621 at 5 p.m. Eastern Monday, down 9% from its February 1st price. Banking regulators, meanwhile, have signaled a pessimism about whether lending institutions can be safely involved with the industry. Some banks have pared down their involvement with crypto. Last week, Binance said it would suspend U.S. dollar bank transfers. The move came after the exchange said its banking partner, Signature Bank, would no longer support crypto transactions below $100,000. Signature, one of the largest banks to serve crypto firms, started pulling back from the crypto business last year. The SEC has been crypto markets' principal cop since the beginning of the Trump administration, when regulators expressed interest in the novel technology underpinning cryptocurrencies. Many of the SEC's earlier enforcement actions targeted small players, giving the market the impression that the industry's best-known brands were safer to deal with and faced less regulatory risk. Then FTX, one of the world's best-known trading platforms, failed in November after a report revealed its affiliated hedge fund was heavily exposed to an illiquid digital asset issued by FTX. Hey, I think I just said that. The disclosure triggered a run on the customer deposits. That caused the firm and its affiliates to enter bankruptcy. The FTC blow-up emboldened the SEC, says Core Garrison, a former regulator and now a partner who advises clients on crypto legal issues. There is a political incentive to bring bigger cases post-FTX to be viewed as a responsible cop on the beat, not to really be a good cop on the beat. The SEC in January sued crypto lender Genesis Global Capital and its partner Gemini Trust Company, alleging that their program allowing users to earn interest on the crypto tokens violated securities laws. Gemini, which operates one of the largest U.S. crypto exchanges, has said it plans to fight the lawsuit. Crypto executives have been spooked by last week's settlement with the SEC and the parent company of Crackdown crypto exchange, in which the company paid a $30 million penalty and agreed to stop offering so-called staking services to U.S. investors. The company didn't admit any wrongdoing, but they paid $30 million. The case suggests that the SEC might force other companies to stop offering access to staking, a practice in which investors lock up their digital assets, such as Ether or Solana, in return for interest rate like yield. The loaned assets allow the borrowers to facilitate transactions on the assets underlying blockchain network. This really should put everyone on notice in this marketplace, said SEC chair, who had ties to FTX, if I'm not mistaken. Services such as lending and staking have been available for years, but the SEC only recently took formal action against them. That has furthered the industry's grievance that Mr. Gensler is uninterested in negotiating bespoke regulatory regime for crypto. Instead, the SEC wants to impose its full Wall Street rule book on the industry's officials say. You are starting to see opportunistic and uneven actions that are designed to try to bring major industry players and platforms within the SEC's jurisdiction. They have a tenuous connection to investor protection. These products have been offered for a long time. Binance US, the American affiliate of Binance, which also offers staking services, has said it is monitoring the situation. Meanwhile, Coinbase CEO Brian Armstrong has pledged to fight the SEC if the agency attacked how it offers staking. We will happily defend this in court if needed. I think it will be needed. Mr. Gensler has warned since FTC's fall that crypto companies include the exchanges that are hubs of the market are running out of time to voluntarily comply with investor protection rules. Mr. Gensler has dismissed crypto industry claims that their market is too unique to coexist with SEC rules as a talking point. Bank regulators appear to have cooled on crypto after the period during the Trump administration when they seemed more open to banks serving digital currency companies. In early January, a trio of bank regulators issued a statement expressing skepticism that digital assets could be safely held by financial institutions. Within a week, Metropolitan Commercial Bank, a small New York bank that had dipped its toes into crypto, announced it was closing its crypto business. Meanwhile, two companies trying to win banking licenses have been left in limbo after winning preliminary approval in early 2021 from the Office of the Controller of the Currency. Paxos National Trust and Predigo Trust Company applied to start banks that would custody crypto assets and facilitate trading. Predigo's conditional charter expired recently. The company believes that the agency's increasingly anti-crypto stance played a role in it not getting full approval, according to people familiar with the matter. Paxos said it remains in discussions with the regulator. Paxos has not been asked to withdraw its application from National Trust Bank Charter from the OCC, nor has it been denied the charter, they said on Twitter. So there you have it. The regulators are starting to regulate. What a surprise. We kind of knew that was going to happen. Again, not much of a surprise. The veracity is not even a surprise. They've kind of signaled that this was going to happen. I think, with the FTX and the politicians in the bank had this Baker-Fried or whatever his name is. Where many were accused or connected to that company's political donations, and so now they have to come out and say that they're against this after they've already kind of lined their pockets with it. That's my opinion. Many others are saying that too, but that's just the way it is. So anyway, I want to thank you so much for joining us here today. The market is what the market is, and we can. It looks like the SEC is going to win out over the Commodities Commission to regulate crypto. I don't think that's a good thing because they have much more harsh rules. They start calling crypto a security, and it will be impossible to use it for its intended purposes, right? Which is buying things, right? A medium of exchange. That was the hope of crypto. But if it's a security, well, you can't buy and sell it like that. You can, and it will really put a damper on the future of cryptocurrency. Maybe that's the plan all along. Anyway, thanks so much for joining us. I want to ask you to like and subscribe. Like and subscribe. We need your help. Please help us get the word out. And also, if you are facing IRS problems, if you have unfiled tax returns and you don't know what to do, first thing you should do is get a copy of my book, Deal with Your IRS Problem Today. Go to freeirsbook.com. That's freeirsbook.com, and I'll give you a free copy. I'll pay for the publishing. I will ask you to pay for the shipping and handling. So go to freeirsbook.com for your free copy. Thanks again for joining us. We'll be back here tomorrow with some more IRS news. I hope you can join us then. In the meantime, God bless you. And we are now out.